It's my immense pleasure to welcome you all on second session of DTRC, a signature event of WRC. Without wasting time, I request all the dignitary kindly join us on the rise. Before starting further proceeding, I recognize the presence of Regional Council Chairman CA Murtuja Kachwala sir, a Central Council member and Session Chairman CA Rajkumar Adukia sir, today faculty Saurabh sir, and my colleague in Regional Council Saurabh Ajmera, Gautam Bhat, Sanjay Bhai, and all. Sir, now I request Adukia sir, please guide us as a Session Chairman.
Good afternoon, friends. Dynamic chairman of Western India Regional Council, the largest region in the whole country where we are having 1/3 membership, and Kohinoor diamonds in the region. And we have a platinum speaker today, Senior Advocate Saurabh Soparkar ji, to discuss on a section which perhaps takes the most importance out of the whole Income Tax Act, the reassessment, and especially when it is on escaping of taxability of income. What I have seen in my professional practice and professional years is something which is complex, something which is out of box, commands a premium. In the economics, we have seen 4 kinds of market. Perfect market, where there are many suppliers and many users of services. Oligopoly, where there are many buyers and few suppliers. Monopolistic and monopoly. Saurabh sir is in a monopoly market, and each one of us should try to reach that level. 24th March 2022 years back really taught us how we can be a global practitioner. UAE is going to have a tax regime. Few other tax havens will have a tax regime, the international taxation. And this happens like with Soparkar sir, when we become a thought leader, when we start speaking out our knowledge, when we start writing our knowledge, and we must find out our passion where we can excel. So we are very lucky that we have our own member, and this also proves that our specialization in income tax and indirect taxes, that chartered accountants' interpretation skill of comma, full stop, inclusive definition, exclusive definition, proviso is far greater compared to, with due respect to, a legal professional. And CA plus law is a killing combination, those who want to go in litigation practice. So sir, thank you for your time, coming all the way from the city, which always innovates. Ahmedabad is known for the various innovative ideas, and this is your own geniusness. So I would request Sanjay Nikamji to introduce our platinum faculty before he addresses us. Thank you. Yeah, this is an audit evidence required that you were here, sir. And I was here. There is no reimbursement of expenditure that I am claiming. But sir, I'm claiming, no, sir. At least for our benefit.
Friends, I also recognize the presence of WRC Secretary Shweta ma'am and Vikasa Chairman Ketan sir. Now I request Sanjay bhai kindly introduce our today's speaker.
Thank you, Ankit bhai. Dignitaries on the dais, our senior Central Council member, CA Dr. Rajkumar Adukia sir, our today's learned faculty. It's okay? Yeah. Senior Advocate Saurabh Soparkar sir, my colleague in region, Ankit Rati, WRC Chairman Murtuza Kachwala sir, Secretary WRC Shweta Jain ma'am, Vikasa Chairman Ketan Saiya sir, my other colleagues in region, Saurabh Ajmera and Gautam Lat, senior members in the profession and my fellow members, very warm good evening. Friends, it is my honor and privilege for me to be here with such distinguished dignitaries on the dais. I have been assigned responsibility to introduce today's learner speaker. I take it as my honor. Friends, we have today with us Senior Advocate Saurabh Soparkar sir, who is going to deliver his wisdom with us, share his wisdom with us on the topic of law of assessment. Friends, he has passed his BCom exam from Gujarat University with first rank among students in the subject accountancy and auditing. He passed his LLB general exam from Gujarat University with first class and obtained 2 gold medals for the highest marks in the paper of Hindu law and Mohammedan law. He passed his LLB with special category with first class, passed intermediate exams of ICI in 1978, secured 3rd rank all over in India and first in Gujarat state. He passed his final exam in 1980 and here also he secured 3rd rank in all over India and first in state of Gujarat. He secured a high award for the highest marks in paper of company law. He's practicing before NCLT, Ahmedabad and Gujarat High Court, the Income Tax Appellate Tribunal. His field of interest are tax laws, commercial laws. He is designated as a senior advocate by High Court, Gujarat High Court. Had been standing counsel for the Income Tax Department for the 3 years, 1986 to 1989 for the state of Gujarat. Contributed papers at various seminars held at different places all over India. Visited professor for IIM Ahmedabad on the subject of corporate tax planning, legal aspects of business for about 22 years up to 2009. He's member of Board of Governors for CPT University, Ahmedabad University, Ahmedabad Education Society. He was president of Income Tax Appellate Tribunal, Bar Association Ahmedabad, vice president NCLT, Practitioner Association Ahmedabad. Friends, you must have observed the heavy biodata of this today's learners faculty. I am requesting all of you to join with me with a big round of applause to welcome him to share his wisdom with us. Before that, I'll request our senior Central Council member to felicitate our learned speaker with a memento. Big round of applause, sir.
Thank you, sir. Thank you for all your time.
Somebody will have to start the PPT. Mr. Chairman, sir, friends. Thank you. It's a pleasure to be here this afternoon to discuss both interesting and challenging topic of reopening of assessment. The assessments would be reopened under the Income Tax Act. In fact, even under the 1922 Act, under Section 34. And when 61 Act was enacted, the provision was carried to Section 147. The law was settled for almost a century. Because if you look at Section 34(1)(a) of 22 Act, it corresponded Section 147 Clause A of 61 Act. And the law was, if assessing officer has reason to believe that income chargeable to tax has escaped assessment, the case can be reopened. And if that reason to believe is formed on account of failure on the part of SSA to disclose truly and fully all material facts, then it can be reopened beyond a period of 4 years post 143 assessment. We'll go into that little later. The issue that I'm trying to bring about at the outset is we had a law which was almost accepted to be final. Almost after 100 years, the legislature seeks to bring about changes. And these changes are of a very fundamental nature. On and from 1st April 2021, the law has undergone a significant change. The law has undergone a significant change significantly because the working of the Income Tax Department has also undergone a significant change. Gone are the days when the assessing officer would make addition on account of household expenditure, low withdrawal, low GP, personal expenditure on account of traveling, so on and so forth. Department is also now concentrating on focused areas, and more assessments are being framed, which are issue-based assessments. Now, revenue knows where the shoe pinches. Revenue knows which are the leakages. Revenue knows which are the avenues which are being misused by the SSEs for not paying taxes correctly. Therefore, assessment modules have changed, and even reassessment module has undergone a significant change. The law is, as we said, a very, very recent one. There have not been very many judgments on the interpretation of new law. Few of them are there. We'll go to that. Attempt on my part is to share with you old law as juxtaposed with the new law and discuss where is it that now the law deviates from the existing law, what are the changes? How would they affect the SSC? To what extent they are beneficial to SSC? And to what extent they may be prejudicial to the interest of SSC? Therefore, attempt over here is to explain old law versus new law, and in the process, understand the new law. I would be immediately starting PowerPoint presentation, but please mark, except for the bare sections, there is nothing in this PPT. If I were to argue, if I were to tell you section orally or from the act, it may be difficult for you to catch the nuances of the provision. Therefore, what I'm doing over here is, I'm putting side by side old section and the new section, old regime and the new regime. And what I would be doing is, I take section by section and explain, in my understanding, how the new law is undergoing, is resulting into a fundamental change to some of the basic issues. With this, let me start with the sections proper. Okay, if I'm in a, I think I would be in a position to finish the discussion on these by the time allotted to me. In the last 10 minutes, I will also take up the mess created by the Supreme Court judgment, Ashish Agrawal's case, and what is it that we are looking forward insofar as the fallout of Ashish Agrawal, old versus new. That also I'll cover up. Let me start with the old versus new section. Please see section 147 old. You would find at the beginning, if the assessing officer has a reason to believe that any income chargeable to tax has escaped assessment. The emphasis is on the phrase reason to believe. Courts had taken a view interpreting this phrase that reason to believe is a condition precedent to be satisfied before the case is reopened. And the reason to believe must be a belief to be held by a normal person, a belief to be held on objective facts, albeit that belief is a subjective satisfaction. But there are objective facts, how a normal person would reach a satisfaction, that's a reason to believe. So suspicion is not good enough. A gossip is not good enough. Conjecture is not good enough. You need to hold a belief. In other words, on the facts found, you as a reasonable man, you Mr. Assessing Officer as a reasonable man should reach a reasonable conclusion that income has escaped assessment. Now this is the foundation stone of the old scheme, a reason to believe. Surprisingly, under the new scheme, the phrase reason to believe is conspicuously absent. If you look at the opening language, opening sentence of new section 147, if any income chargeable to tax in the case of an SSE has escaped assessment. It's a conclusion, not the belief to begin with. The first controversy therefore would be, now that there is no need to hold a reason to believe under the new scheme, is it free for all for the assessing officer? Is it that an assessing officer can take any view? Because now the law does not require him to hold a reason to believe, which has to be a reason to believe as a reasonable person. I would take a view, absence of the phrase reason to believe is completely irrelevant. It's irrelevant because ultimately he has to reopen assessment. His action of reopening assessment, if tested in a court of law, will have to meet with the criteria of a right decision taken by right process on the basis of right facts. If that is the test that the action will have to meet, then presence or absence of the phrase a reason to believe, I would believe, frankly, would not really matter much. Under the old law, he had to have a reason to believe income has escaped assessment. Under the new law, income chargeable to tax should have escaped assessment. This is therefore not a major problem or major issue. Major issue comes now. Now, okay, if you look at old section 147, later part of section 147 says, once he reopens assessment, he can also assess any other income chargeable to tax which has escaped assessment, which comes to his notice. Can you see the cursor which I am putting over here, or you can't see? I'm not sure. You can see, no? Okay. So I'll put cursor wherever I believe you need to pay a little more attention. Once he reopens the assessment, he can also assess any other income chargeable to tax which comes to his knowledge. You do not find this phrase in the main section new 147, but you will find there is an explanation which covers the same issue. So presence of that liberty under main section 147 is now captured under explanation to section 147. So again, that would not matter. As Bombay High Court has taken a view, Jet Airways 331 ITR 236, but in any case, he has to make addition of the income which has escaped assessment. Let's say he reopens assessment on a premise that income of rupees 10 lakh from source A has escaped assessment. Once he reopens, he can tax that 10 lakh and 30 lakh more. But if he does not tax 10 lakh because he ultimately is satisfied that that income has not escaped assessment, then he is thereafter having no power to go forward and make any further assessment. That was the law under the old method. Now, even under the new regime, I would believe that the same limitation would apply. But now please see the changes. New section 147, as you can see, has come to an end. Whereas under the old section 147, there were provisos and explanations. What is the impact of the absence of those provisos and explanation under the new law? Look at the first proviso, a very important proviso. Under the first proviso, there was a limitation on the power of assessing officer to reassess an income or to reopen an assessment if there was an original assessment under section 143.3, unless there is a failure on the part of assessee to disclose truly and fully all material facts, he could not have reopened assessment beyond a period of 4 years. So then, to recall, under the old scheme, section 143.1 assessments, they were all governed by the judgment of Supreme Court of Rajesh Javeri. 143.3 within 4 years, Calvinator. 143.3 beyond 4 years, Calcutta discount. Why that Calvinator versus Calcutta discount? Beyond 4 years, within 4 years, proviso required that. So then under the old scheme, whether or not SSC is at fault was a material issue. If SSC is at fault, reopen up to 6 years. If SSC is not at fault, post 143.3 assessment cannot reopen beyond 4 years. That distinction has now completely disappeared. Under the new scheme, whether original assessment was under section 143.1 or 143.3, within 4 years, beyond 4 years, failure of the SSC, no failure of the SSC, Everything has disappeared now. Now it is not necessary for the revenue to show that there was any failure on the part of the SSC to disclose truly and fully any material fact, nor an SSC can dispute reopening on the ground, I had made full disclosure. If you don't reassess, it is not my fault. Therefore, one fundamental change that we find under the new regime is you do not now look into whose fault was if income has escaped assessment. That takes me to a slightly different issue, but let me cover up at this stage. There is going to be a serious debate on the issue which I raised little while ago. Assume a situation, an SSC has made a disclosure. At the original assessment stage, the matter has been examined in great detail. Thereupon, an assessing officer chooses not to make addition. Under the old law, beyond a period of 4 years, there could have been no case of reopening. Under the new law, in absence of proviso, in absence of any new information, would revenue be entitled to reopen? One argument against the SSC is, but now there is no prohibition under the proviso to section 147 that you need to show failure or no failure. Now there is a complete carte blanche, open-ended power given to the revenue. But is it so? If you examine the judgment of Supreme Court in the case of Calvinator, Supreme Court very beautifully brings out distinction between reassessment and review. The Supreme Court says, if on the same material, an authority is having a relook of the matter, it is not reassessment, it is review. And power of review is not available to the department. They only have a power of reassessment. Supreme Court therefore said, in order to invoke the power of reassessment, you need to go beyond review. That line of judgment, in my personal view, would still continue to hold good. That's my view. As I said, it will have to be tested at some point of time in the court of law, but that's my view, that if you are permitting revenue in view of omission of a provision equivalent to proviso to section 147 under the new scheme, if you are permitting revenue to start reassessment on the same matter, on the same set of information, it will be nothing but review, which Supreme Court says reassessment does not include review. But that's a question which will have to be tested at some point of time in a court of law. The second proviso under the old section said, in relation to foreign asset, there was a wider power available to revenue to reopen. Now there is no such additional wider power. Third, again, this is likely to be slightly problematic. If you look at the third proviso says that if there is an assessment, original assessment, which is taken to appeal, reference, or revision, then assessing officer has no power thereafter to reassess income which has been subjected to revision, appeal, or reference. Principle of merger, therefore, was expressly incorporated in the statute. Conspicuously, this provision is not carried to the new act. Can it be therefore argued that an assessing officer now has a power of reassessing even that income which was subject matter of appeal, revision, or reference? Whether absence of this proviso opens floodgate for the revenue, whereby they can trample the SSC by reopening issues which have been settled or which have been subjected to appeal, reference, or revision. My view is even absence of this proviso would make no difference, and an issue settled in appeal, revision, or reference cannot be reassessed by the assessing officer even after exclusion of this proviso. And I must give reason why. The moment order of assessing officer is taken in appeal or revision or reference, and the moment there is revisional order, appellate order, or reference order, order of assessing officer merges into the order of the higher authority. In that event, his order ceases to exist in eye of law. What exists in eye of law is the order of the superior authority. And an assessing officer, in the guise of reopening, cannot sit in judgment over the view taken by the superior authority. Take a situation. AO in the original assessment says, I reject books of account, estimate GP at 8%. I carry the matter in appeal. CIT says not 8, but 6%. Or he may say 8%, I confirm, whichever way, it does not matter. AO cannot now reopen and says, oh, I believe it should be 7%, 9%, or 5%. He cannot touch the issue of GP in any case because his order has merged into the appellate order, and what survives today is the appellate order and not his order. So the absence of third proviso under the new scheme again would not really matter. Now, two important changes by omission. First explanation is not carried to the new scheme. The first explanation said that production before the assessing officer of account books or other evidence from which material evidence could be gathered with due diligence have been discovered, etc., will not necessarily amount to disclosure within the meaning of the above provision. You don't find this in the new act. Why? The very concept of failure to disclose or no failure to disclose, as we saw a little while ago, is now irrelevant. When the question of failure to disclose has become irrelevant, explanation one, which decided what is disclosure, what is not disclosure, again has become irrelevant. But I believe absence of second explanation is going to be very, very interesting. Second explanation under the old section 147 covered certain cases of deemed escapement. And if a case fell under explanation 2, the law assumed that income has escaped assessment. For example, there were 6 situations. We'll go to 2 or 3. You have not filed return of income, though you are liable to file return of income. Or you have filed return of income, assessment is framed, but you have been given excess loss, excess deduction, excess allowance, or excess relief. I claim, okay, loss of rupees 5 crore, carry forward unabsorbed depreciation of rupees 3 crore. My assessment is a loss of rupees 2 crore. Depreciation is obviously not disturbed of rupees 3 crore. Now it is realized depreciation, I am not entitled to 3 crore. It's only 1 crore. It would come under clause B of explanation 2 to section 147, excessive allowance. Or income is assessed at too low a rate. Instead of applying 33% or 30%, the tax is levied at 10%. Or you are given excessive relief. These are all cases which under the old act resulted into a deemed escapement of income. Under the new act, this explanation is not carried, which would mean now I file return of income of rupees 1 crore. I claim I should be assessed at 10%. I'm assessed at 10%. Later on, it is found that no, correct rate of tax should not be 10%, but 30%. My income is correctly assessed. What is not correctly assessed is the tax. Under the old regime, explanation came to the rescue of the revenue. Under the new regime, I am afraid or I'm happy revenue will have to lose out. Just see one Gujarat High Court judgment. An SSC was assessed originally under MAT. Let's assume MAT of rupees 5 crore, regular income of rupees 1 crore. Case was sought to be reopened because there was escapement of income of rupees 50 lakh. SSC disputed the reopening on the ground that even if you add rupees 50 lakh in my regular assessment, I would still be assessed and there would be no additional tax liability, and therefore income has not escaped assessment. It's a different matter that MAT credit would be reduced. Nonetheless, income has not escaped assessment. Gujarat High Court accepted that argument in the case of Moto Tiles 386 ITR 280. In other words, unless the case falls within the express provision of a statute, you cannot assume that income has escaped assessment. In absence of these explanations, deeming escapement of income under the new regime, now unless there is escapement of income, not taxation at a lower rate, not excessive relief, not excessive claim, not any other benefit, revenue may not be open to reopen the assessment. This is so far as section 147 is concerned. These are other situations or explanations. Let me now go to section 148, which is again a very, very important. I will be discussing only 5 sections. So 147, 48, 49, 51. So it's not as if we are going to discuss very many sections. Let's look at section 148. Section 148 was essentially procedural. Under the old section 148, subsection 2 was material. The assessing officer shall, before issuing any notice under this section, record his reasons for doing so. So section 148.2 obliged assessing officer to record reasons. And once he records reason under 148.1, he has to issue notice requiring SSC to file return of income, and thereupon assessment will start. Section 148 now has undergone a complete change. There is a reason behind this. 148 and 148A under the new scheme, 148 is a new section introduced under the new scheme. They are fallout of a Supreme Court judgment in the case of GK and Drive Shaft, where Supreme Court said that before you actually reopen the assessment, after you record the reasons, supply reason to the SSC, SSC will file objection against your reasons. If it is found that reasons are not good enough, you drop reassessment. Otherwise, you reject these reasons, reject these objections, and proceed with the assessment. This was a procedure established by virtue of judgment of the Supreme Court, section nowhere required. This is now put in the statute book by various steps under section 148A. We will go there when we reach 148A. Section 148 now permits an assessing officer to issue notice under section 148 subject to provision of section 148A. So we'll have to go to 148A, but for the timing, I'm reserving this. Along with a copy of the order passed under clause D of section 148A. Again, this is relevant for the purpose of 148A discussion. So section 148, which is equivalent to old 148.1, permits revenue to issue notice requiring SSC to file return of income for the purpose of starting reassessment. But proviso is most material. Provided that no notice under this section shall be issued unless there is information with the assessing officer which suggests that income chargeable to tax has escaped assessment in the case of the SSC for the relevant assessment year. Please recall old section 148, 147, assessing officers should have reason to believe income has escaped assessment. That was a matter of belief. new section 147, 148, assessing officer cannot proceed unless he has information which suggests that income chargeable to tax has escaped assessment. Please mark the word, legislature has advisedly used the word suggests. It is not proofs, nor is it suspects. Suspect is one end of the spectrum, proof is another end of the spectrum, suggestion is somewhere in between. He cannot pick up something and everything as a gossip to say that this, I believe that this is good enough. Nor is it required to reach a final conclusion at the stage of issue of notice under section 148 that income has escaped assessment. That information should be suggestive of the fact that income chargeable to tax has escaped assessment. Suggestive, not conclusive. Suggestive, not completely irrelevant. So he has to have information which suggests that income chargeable to tax has escaped assessment. So what is the information? Question number 2. What is the information which an assessing officer might have which would suggest that income chargeable to tax has escaped assessment? One way of looking at the matter would have been, there would have been no definition under the statute, in which event, again, we would have been back to litigation as to whether this is good information, bad information, so on and so forth. Now, under the new act or the new scheme, what is information in possession of the assessing officer that income chargeable to tax has escaped assessment is also defined under the act. The definition of the act, therefore, both circumscribes power of AO, he can't go beyond that, nor can SSC question use of the information if it is a permissible mode of seeking information. Therefore, what is information is now a defined term. Please go to explanation 1. Now, explanation 1, okay, before I go to explanation, the law assumes information which suggests that income chargeable to tax has escaped assessment, again in 2 compartments. 1, actual information, 5 situations, and dimmed information, 4 situations. Case will have to fall under either actual information 5, one of the 5, or dimmed information, one of the 4. If the case does not fall in any of the 9 situations, case cannot be reopened. And if the case falls in one of the 9 situations, case can be reopened. So what are the 5 situations? Explanation 1. Explanation 1 defines actual information. The first piece of information is any information in the case of the SSC for the relevant assessment year in accordance with the risk management strategy formulated by the board from time to time. They had originally used the word flagged. The word flag is deleted. Nothing may turn on it. But any information, please mark, in the case of SSC. So it has to be in the case of SSC. Second, for the relevant assessment year. So not only there should be information in relation to SSC, but for the relevant assessment year. And how would it be obtained by the AO? It would be obtained by the AO in accordance with risk management strategy formulated by the board from time to time. That will lead us to next question. What was the risk management strategy? CBDT has issued a circular on 10th December 21, defining as to what are the sets of information which need to be flagged on the portal, which would be regarded as information good enough for the purpose of clause 1 of explanation to section 148. 6 situations are prescribed. 1, information from any other government agency or a law of enforcement agency, GST, customs, FEMA, whatever. Income arising out of internal audit objection which requires action under 148. Now, please mark, Supreme Court had originally taken a view in the case of Indian and Eastern newspaper that opinion of the audit department is not a ground for the purpose of reopening. That judgment may not hold good anymore by virtue of a fact that this is now expressly included as the source of information. Third, information received from any income tax authority, including AO himself. Now, why is this put in? Assessing officer is assessing case of A, and he realizes that there is something wrong with the declaration of income of B, but B is also assessed by him. So he has not to send information to third party. He has to send information to himself. And therefore, information which is generated by the AO while dealing with some other case may also be good enough for the purpose of reopening the assessment. Information about search or survey action. I'll come back to this a little later because there are a couple of other angles to this. So we'll come back to this. Information arising out of foreign trade transactions. Information arising out of order of court, order of NCLT 263, 264 proceeding, or having impact on the income of the SSC. And finally, cases where additions are made in the earlier years, which are subject matter of appeal. Either the revenue has succeeded, or even if the revenue is lost, revenue is carrying the matter higher up. In order to keep the issue alive, the additions, the case would be reopened for the current year also, provided in one of the metros, the income chargeable to tax is likely to exceed rupees 25 lakh. In the rest of the places, it is likely to exceed rupees 10 lakh. Now, this is one set of information. Please mark between 1st April 2021 and 31st March 22, revenue had only 2 sources of information. This was one. The second was the final objection of C&AG department. Now, final objection of C&AG department would be hardly relevant in case of few SSs, barring few SSs, which are government entities, it would have no application. So therefore, effectively, this was the only source of reopening. But on and from 1st April 2022, you find 4 more sources of information, which information would be regarded as suggestive of the fact that income chargeable to tax has escaped assessment. Those 4 cases are audit objection. Now, therefore, please see, if there's audit objection, it would not only be covered under the earlier clause by virtue of the board instruction, now expressly covered under clause 2. Information under the DTAA arrangement or tax treaty arrangement or tax sharing of information arrangement. Section 135A is a newly enacted section whereby revenue has been given a power to collect information. So if information is available there, or any information which requires action in consequence of order of tribunal or court, again, this is duplicated with the board circular. Be that as it may, these are all additional 4 more sources for the purpose of gathering information in order to reach a conclusion that income chargeable to tax has escaped assessment. So these are 5 sources where assessing officer will have to satisfy himself that income chargeable to tax has escaped assessment. But legislature also provides for 4 more situations where law assumes that income chargeable to tax has escaped assessment and the assessing officer has information in relation thereto. In other words, in the 5 cases that we saw earlier, AO will have to record satisfaction that income chargeable to tax has escaped assessment. In the 4 situations that we see now, the law assumes, please see, the AO shall be deemed to have information that suggests income chargeable to tax has escaped assessment. So these are the 4 situations where by deeming fiction, it is assumed that he has that information. What are the 4 situations? 1, search in the case of SSC or requisition in the case of SSC for that year. 2, survey in the case of SSC, other than survey under section 133A, subsection 2A, so other than TDS survey. Originally, there was also exception for subsection 5, event-based survey, but now that exception is taken out, meaning thereby event-based survey would result into belief given to the assessing officer that income chargeable to tax has escaped assessment. 3rd, search in the case of a third party and any money, bullion, jewelry, valuable article or thing belonging to SSC is found there, analogous to old section 153C. 1. Or 4th situation, search in the case of a third party and at the third party, any documents or books of account or record is found which contains information pertaining to SSC analogous to old section 153C(a)(2). In these 4 situations, assessing officer is not required to have information that income has escaped assessment. He is, by law, he is given information. In the first 5 situations on facts, he has to have information. He has to gather information. In these 4 cases, he is having information. There is a very minor but a very significant change by the Taxation Laws Amendment Act. Please see the screen. Earlier, in all these 4 cases, the presumption was assessing officer has information, but that information was in relation to 3 years immediately preceding the assessment year in relation to search or survey. Now the phrase in relation to 3 assessment years immediately preceding the relevant assessment year is omitted from a retrospective effect from 1st April 21. This is likely to create both confusion and complication. Let's say there is a search on SSC today. Assessing officer is therefore by virtue of this deeming fiction, having information that income chargeable to tax has escaped assessment. But for which year? Last year, last 3 years, last 6 years, last 10 years? Because we will see little later, under the new scheme, they can reopen assessment up to as many as 10 years. So how many years? By omitting the phrase for the 3 years as immediately preceding the relevant assessment year, now it is made open-ended and it is capable of being argued by the SSC that it is not entitling revenue to reopen last 10 years. Revenue would argue otherwise. Courts will have to take a view exactly now for how many years revenue has a license to reopen the assessment. Now let's go to section 148A. Now 148A is exactly for the purpose of giving effect to GK and drive shaft. (148) is in 4 parts. Clause A. EO will conduct inquiry as regards information that suggests that income chargeable to tax has escaped assessment. Suppose there is a search at the premises of Mr. X and an entry is found in the name of Mr. Y. Assessing officer of X sends the information to the assessing officer of Y. Now, whether it is the very Y who is SSC of that officer or some other Y, that information will have, that inquiry will have to be made. So wherever inquiry is necessary, you will make the inquiry. provide an opportunity of being heard to the SSC. So second clause, I will not read. AO will have to issue notice to the SSC, give him minimum 7 days, maximum 30 days to begin with, to respond to what AO is alleging. So assessing officer shall give information, will give notice, but please also mark, he will also share information which suggests that income chargeable to tax has escaped assessment. So unlike old notice under section 148, where you were presented with fait accompli, or even after pursuant to GK and drive shaft, you will file objection, what you would be given is skeleton of his reasons, but not the evidences. Now under new section 148, a clause B, AO is required to share information which he has, which leads him to believe that your income has escaped assessment. So this is, in a way, a transparent way of proceeding in the matter, a very welcome step. AO will not keep anything up the sleeve. AO will say, I have with me, for example, statement of Mr. X that you paid him on money, or document found at the premises of B, which shows that you have not paid taxes correctly, so on and so forth. The assessing officer shall issue notice and give information to the AO, give information to SSC as to why does he believe that income chargeable to tax has escaped assessment. Thereupon, SSC will be in a position to give reply. AO is required to consider the reply. The word consider means he will have to apply his mind, look into its contents, weigh the arguments for and against the SSC, and then clause D, decide. Please mark, legislature has advisedly used the words consider the reply and decide. He is a quasi-judicial authority, must apply his mind to the issues raised before him. Questions have arisen repeatedly as to whether an assessing officer is required to A, pass a detailed order. Issue arose firstly before Delhi High Court in the case of First Solar Power, a judgment rendered on 26th May 22, or also before Bombay High Court in the case of Tata Capital Financial Services 443 ITR 127. Both courts have taken a view, even Gujarat has taken a view that disposal of objection cannot be mechanical. You supply information to SSC, SSC gives detailed reply running into 20, 30, 40 pages. You can't say, I don't agree. You have to give reasons as to why you don't agree. And unless you give reasons explaining as to why you don't agree, the decision rendered by you is vitiated, liable to be struck down. In fact, Bombay High Court in this Tata Capital also said that if assessing officer has sought for, in a given case, he has to seek approval of the higher authority. If he has sought for approval of the higher authority, on what material he sought for the approval, that also must be shared with the SSC. Delhi High Court in the case of Ernst & Young US LLP judgment of 20th May 22 has taken a view that if the objections are not appropriately dealt with, it is bad. Gujarat High Court in the case of Studio Venture, 6th June 2022, if disposal is not satisfactorily handled, the whole proceedings are bad. Courts have therefore been now have started deciding these matters, casting an obligation on the AO to decide the objection of the SSC reasonably, fairly, impartially, and without any bias. So this is the way in which assessing officer, before he issues notice, will pass an order under clause D of section 148A. And please go back now to 148 notice. Along with the notice, AO will also share with the SSC order that he has passed under clause D of section 148A. So Now the steps will be first a notice 148A, reply of the SSC, B, consideration, C, decision, D, 148A D order together with 148 notice will be given to the SSC. If SSC wants to challenge these proceedings in a court of law, High Court, it would be at this stage, he can go to High Court. But again, there is a twist. It is not as if that in every case, this procedure of section 148A is required to be observed. Now you look, provided that 148A provision is not required to be followed in 4 situations. Which are the 4 situations? Search or requisition in the case of SSC. Search or requisition in the case of a third party, and books of money, bullion, jewelry, etc. of SSC is found. Search or requisition in the case of third party, and information or documents in relation to SSC are found, or from 1st April 22, case is reopened on the basis of information under section 135A. Now just look at the complexity. Please go back to section 148. Under explanation 4, there are 4 situations where by deeming fiction, it is assumed that he has information. One of the situation is survey. In case of survey, there is an assumption that is information. Barring survey, the other 3 things are carried under proviso to section 148A. Survey is not carried there. So what is the effect? If there is a survey, there is a presumption that assessing officer has information leading to a belief that income chargeable to tax has escaped assessment, but still he will have to undergo 148A procedure. SSC will be issued notice, explanation, disposal. In other 3 cases, it may not be necessary. So you will have to find out what is the basis for reopening. Is it a case of actual information or deemed information? If it is deemed information, is it survey or otherwise? If it is a deemed information other than survey, 148A procedure is not necessary. If it is actual information, 5 situations, please go back. 135A is covered there. So if it is 135A, no need for 148A procedure. But for other 4 things, you need 148A. So it's like a maze where you will get lost between 148 and 148A. You will have to be very careful to see why your case is reopened and why is it that a particular procedure is required to be followed. So 148A procedure and an exception we have seen. 148B is again a procedure. I'll skip that. Now I go to 149. This is the last important section that I'm dealing. Under the old section, case can be reopened within 4 years, beyond 4 years, depending upon whether income chargeable to tax has escaped assessment exceeding 1 lakh or otherwise, etc. Ordinarily, reopening was up to 4 years or up to 6 years if it is 143(1) or failure of the SSC. Now, period is being curtailed to 3 years. Generally, we'll go to exception in a moment, but generally. So we are right now having, this is June 2022, assessment year 22-23. So case of 18-19, year would be over 20, 21, 22. Assessment at 18-19, 3 years having been passed, cannot be reopened now. So in place of 6 years, now ordinarily it's only 3 years. So to a great extent, SSs are benefited. They are not under the Damocles sword for more than 3 years. When the law was amended in April 21, there was only one exception to that 3-year period. Now that one exception is expanded to 3 exceptions. Let's go to first all the 3 exceptions. The exception is where the assessing officer has information that income chargeable to tax has escaped assessment in excess of rupees 50 lakh. But please mark down the language. Assessing officer has in his possession books of account or other documents or evidence which reveal that income chargeable to tax represented in the form of asset, which was only up to last year. Now from the current year, 2 more issues: expenditure in respect of a transaction or in relation to an event or occasion, or entry or entries in the books of account exceeds rupees 50 lakh. So the extended period of limitation is available if and only if 1, assessing officer has in his possession books of account, document or evidence. 2, it should reveal. 3, that income chargeable to tax has escaped assessment in excess of rupees 50 lakh. And 4, that income is represented in the form of asset, expenditure or entry. This is going to be the bone of disputes between the parties. Revenue has been reopening assessment, let's say for assessment year, or 6 to reopen for assessment 16-17. 6 years have not passed. 3 years have passed. So they have to go for this clause B. And the allegation is revenue has got information that there is bogus share capital, or there is bogus loan, or there is client code modification, or SS is beneficiary of penny stock. In all these situations, I have a simple question. How would extended period of limitation apply? Because in order to invoke extended period of limitation, you need to show not only income has escaped assessment, but that income escaping assessment is represented in the form of an asset. Now, revenue is taking a view, your bogus share capital brought in cash in your books, cash or check in the books of account, or client code modification resulted into loss or gain, whatever. Client code modification loss in any case would not be there, but you did not show correct income. Or for that matter, the loans are not genuine, the cash is available in the books. Is it revealed? It was already reflected in my books of account. Reveal is something which is detected, which is found, which can be now seen, which was otherwise hidden. I would take a view that if alleged escapement is not reflected in the form of an asset, for example, there's a search, bullion, jewelry, valuable article, thing are found, obviously asset is found. But unless it is represented in the form of asset, you may not be able to invoke this particular extended period. The clause 2 was required to be put in, and it is there only from 1st April 22. So it will not apply. Clause 2 and clause 3 will not apply for the period between April 21 and March 22. that deals with the situation of marriage. In fact, when this act was enacted last year, before this clause got inserted in 2021, I had said in one of the budget seminar that if a search takes place at the premises of A, and if it is found that 4 years back he celebrated a marriage and paid ₹1 crore in cash to a 5-star hotel, it will be a case of unexplained expenditure. Revenue will not be able to reopen the assessment. Now they have corrected that particular error. The case can be reopened. But the third situation is going to create significant complication. It says entries in the books of account. There is a search. Loose papers are found. Entries are found in rough papers, loose papers. Would it be books of account? Would books of account only mean and include formal books, bound, serially paged, or would it also include a rough record? Another complication could be, would it include electronic record maintained systematically as books? Or would it include electronic record, which is nothing but jottings? Now, the term books of accounts came up for consideration before the Supreme Court in 2 cases, important cases. One is V.C. Shukla, and secondly, recently in the case of Sahara, which is common cause. 394 ITR 220 is Sahara. V.C. Shukla is 1998, 3 Supreme Court cases, 410. In both these judgments, Supreme Court took a view, rough papers, rough jottings, they are not books of accounts. If that is the situation, let us say there are entries in the rough paper which would disclose the transactions of income in excess of rupees 60 lakh, 70 lakh, 80 lakh, 5 crore are escaping assessment. It may still be open to an SSC to say that there is no entry in the books of account. So unless the case falls under clause 1 or 2, asset or expenditure, SSA may still be able to resist reopening beyond a period of 3 years. Now there is a proviso, which is also important to be noticed. Under the old scheme, the case can be reopened up to 6 years. Under the new scheme now, they can go up to 10 years. But it is well settled that if you extend the period of limitation, something which had expired, if limitation had expired before you extend the period of limitation, will not get the benefit of extended period of limitation. That limitation would have expired. That statutory provision, that judge-made position is statutorily accepted. That if notice cannot be issued under the old act, then now no notice can be issued under the new act. Meaning thereby, let's take assessment year 12-13. 12-13 period of 10 years is not over. Therefore, under the new scheme, ordinarily you could have reopened. But because on 12-13 cannot be reopened now, 6 years have already passed, in no case assessment at 12-13 can be reopened. Or for that matter, 13-14 can be reopened, 14-15 can be reopened. Or today, last that you can reopen is 15-16. No, nothing up to 15-16 can be reopened because 15-16 also would expire on 31st of March 2022. So this proviso also has to be kept in mind when you're looking at the limitation. One slight procedural change which we must keep in mind. Under the old scheme, the AO was required to issue notice before the period of limitation. 4 years, 6 years, but before that period of limitation. Now, under the new scheme, he has to issue notice under 148 capital A, clause A within limitation period. Thereafter, limitation period is saved. For example, he may issue notice under section 148AA on 25th of March. When the period of limitation is getting over on 31st of March, he can issue on 25th March. If he gives 1 month's time to the SSC to give reply up to 1 month, and thereafter 7 days, he will have time to dispose of the objection and issue notice under section 148. So that's the reason why now you find notice is being issued almost at the end of the period. Revenue is not really worried at the end of the period because in any case, time that you take in giving reply gives them extension. Explanation to this provision says what is an asset? Asset includes immovable property, land, building, shares, securities. Practically, it includes everything. One more amendment is introduced now, which is in a way not an unreasonable amendment. SS has acquired an asset of rupees 90 lakh. He has paid 45 lakh in year 1, 45 lakh in year 2, or he has spent rupees 1 crore 20 lakh for a marriage, 40 lakh in year 1, 40 lakh in year 2, 40 lakh in year 3. In no year it will exceed 50 lakh. Would revenue therefore be helpless? Subsection 1A says if it totally exceeds 50 lakh, then the case will be reopened for each of the year where the transaction percolates. I will not really deal with the sanction, which is a procedural issue. That gives me 5 minutes and I'll deal with the issue of the fallout on account of the messy judgment of the Supreme Court. We all are aware of the fallout of Corona. In order to save the limitation from framing assessment, Taxation Laws Relaxation Act was promulgated, notifications were issued, under which time to frame assessment got extended. Time to issue notices also got extended. Revenue believed that because time is extended, even the old provision gets extended. And therefore notices were issued after 31st March 21 under old section 148 without following 148A procedure. All those notices came to be challenged across the country. Every high court barring Chhattisgarh struck it down. Matter was carried to Supreme Court. Supreme Court said, yes, all high courts are right. All these notices are bad. But then revenue has made a mistake. So let's help it out. I wonder how Supreme Court can say that one party to the litigation has made a mistake and it must be given a benefit of doubt. But that's what the Supreme Court did. We can't question Supreme Court. Supreme Court therefore said that, oh, we will treat all notices issued under old section 148 as if they are issued as a show cause under new section 148A. SSC may give reply. Thereupon, AO will dispose of the objection. 148A D order will be passed and then 148 will start. The problem is, therefore now, A, whether notices are valid or not. Supreme Court says they are valid. How can we question that? It's an end of the matter. But B, which regime will apply? Supreme Court very clearly says high courts are right. Therefore, new regime will apply. Therefore, new section 149 will apply. If new section 149 will apply, then the limitation for reopening, you can't go beyond 3 years unless income escaping assessment exceeds 50 lakh, unless it is represented in the form of asset. The other two clauses, expenditure and entry, have been introduced only for the current year. When all these notices were issued, the other two clauses were not there. So unless the escaped income is represented in the form of asset, you cannot go beyond 3 years. Now, 2 years were saved because of the Taxation Laws Amendment Act. 1314, it would expire on 31st of March 20 by virtue of the Taxation Laws Extension Act. It was up to March 21 and June 21. So assessment at 1314 and 1415 can be done, but 1516 was not expiring. Whether for 1516 this period will apply or not, 1617 it will apply or not, 718 it will apply or not. These are all questions which are being debated or which would be debated in the times to come. The revenue has issued, pursuant to the Supreme Court order, fresh notices in every case. SSCs are in the process of responding. Assessing officer will now have to pass order under section 148A clause D. Read with section 148, notices will be issued. And then very soon, a second round of litigation is likely to start. So instead of bringing an end the controversy because of the error of the revenue, for which revenue has been given a pardon by the Supreme Court, we are now going to have a second round of litigation, which will keep us all very, very busy. With this, my time is coming to an end. Thank you very much for giving me a very, very patient hearing. Thank you.
Any questions?
Not because of TOLA, but by virtue of the notification issued under TOLA. TOLA, when it was enacted, extended 30th or 31st of March, but it also said revenue may issue notification from time to time for further extension. So that further extension having been given, it will send extended. So they will have time up to 30th of June 21, but under the new law, and the rules of the game would be under the new law and not under the old law.
Okay. Secondly, sir, the now new notices have been received from the jurisdictional assessing officer, whereas section 140, 151A, and there is also a notification which says that notices are to be issued from the national center. So what do you say?
It will
sir?
be right of, you have a right to challenge it
Yeah.
if it is not in accordance with law,
No.
because Supreme Court has said all defenses of the SSC are kept open.
Yes, sir.
So if revenue makes any mistake, I am sure second time Supreme Court will not pardon them.
Yeah, I was thinking whether there is any concurrent jurisdiction, but we did not get any notification. So we
That
have to
I would
check
not
that.
be able to
Yeah,
answer,
yeah,
but
yeah.
if it is illegal, you have a right to challenge
And
it.
one more, sir, search and seizure cases, 148A procedure is not to be followed. But GK and I staff has to be, has to be followed. Whether just there is a search, it doesn't mean that directly assessment can be reopened. Has it to give me information, etc.?
No.
No.
If it is in your case, no. If it is in case of a third party or your money, bullion, etc., found, no. That the law says it is not necessary.
Thank you, sir.
Yes, sir.
The first of purpose requirement, the old and new.
Sir, please have this mic so that everybody will have it.
Whether whether the assessing officer can issue the notice just for verification, even under section 148A, where only the entries are there from the transfer of some amount from one account to another of the same SSC, where the no escapement is involved. You see, this is neither third party transfer, nor third party receipt, nothing. Only transfer from one account to another account to first account, because the banks are required to give the STR report, that is suspicious transaction report. So on the basis of that, the risk management, that condition is required. But whether they, unless, and even if there is no escapement of income itself, whether they can issue the notice.
See, the question of escapement of income as a matter of proof will come only after assessment is framed.
Correct.
Escapement of income as a matter of suggestion can come on the basis of information which assessing officer may have without having benefit of your explanation. So first stage is what he believes. On the basis of his belief, he will initiate reassessment. After considering your reply, he may either drop reassessment or he may not frame assessment, answering your question. Therefore, suppose there is a noting of suspicious transaction, where whether it is right or wrong is not fully reflected. Assessing officer would be entitled to treat that information as giving him reason to hold that he has information which suggests that income chargeable to tax is escaped assessment, because please look at that section 119 guideline of CPDT to which I made a reference. One of the information is from any department. Second is it can be by the same assessing also, but there is one catch or one clarification. Suppose the 148A proceedings are not empty formality. Suppose you can give demonstrate conclusively, even at the stage of 148A, that what he has and what he shares with you is something which is fully reflected, their own transaction, I would believe he would be required to drop it. If he does not drop it, it will be a bad order which you can challenge.
Because those informations are already part of the assessment under section 143 earlier, exactly same information.
That I already said that calculator may still apply.
I appreciate. Number one. Number two, sir, even in these type of notices, where the inquiry is conducted by the assessing officer, he has to, under section 148B, he has to give the result of inquiry to the assessees. Now,
Correct.
whether the result of inquiry means only the conclusion that I have made the inquiry and I have
No.
concluded the conclusion, or he has to give the detailed background behind that result of inquiry also to the assessee.
I would believe if SSC, see, to begin with, he may only give the conclusion. But if SSC requires him to ask him to share the facts leading to conclusion, correspondence, he would have to share with the SSC. Otherwise, the action would be bad.
So in that case, the assessee's reply under section 148B, AB has to be in two parts. First of all, I should ask him the result of the inquiry, details of the result of inquiry, and then I should give my final reply for under section, for the order under section 148D.
On a practical side, on theoretical side, I will agree with you. On practical side, I'll tell you why I would not go with that. I would believe I would put an interim reply on the basis of whatever information that I have and ask him to give additional information to give further reply. And I must tell you why. Suppose you don't give information, ask for information from him, and he does not give information. He will pass order against you. Suppose you challenge in a court of law. Some judge might take a view he is not required to share information at this stage, in which event your right to raise objection will be lost. Instead, it is better, whatever you have, raise objection, but also say, I also need additional information to give complete and exhaustive answer. If he does not share, you have that particular option open.
I appreciate. Thank you very much.
Thank you, sir.
Just a minute.
Yes.
We are taking only one question because next session speaker is also in house. So,
One time. Correct, because 148A, small a itself says if necessary. If an assessing officer finds inquiry is not necessary, he may not hold inquiry. So it is not mandatory. What Supreme Court meant to say was, even in cases where it was necessary, we are in this case saying ignore it. But otherwise it is not mandatory. Thank you very much.
we can have a discussion in tea break. Sorry to all of you. Time is very short. Our next speaker is in house, so we need to conclude this session right now. Friends, we all know that reopening of assessment is always a complex matter and always open for litigation, and there is no ending for this litigation. And after amendment in section 147, new section incorporated 148A. Again, many high courts have given different decisions, and again Supreme Court came into picture, and whole matter get more complicated. And sir rightly said, there is second wave of litigation is coming up. In my opinion, litigation is there, opportunities for chartered accountants and advocates. So humor apart, we need to be upfront and we should pull our socks up, because learning to karna padega, because the litigation karna hai, so we need to be very expert on the topics. So learning to continue karenge. Friends, we would like to thank our learned speaker. He elaborately explained the topic within the limited span of time. That's the best part I observe in your submission and presentation, the comparison between old and new regime that give a simple way to understand the topic. Apart from that, sir, the important part that now definition of income chargeable to tax assessment is now defined properly. And the 9 aspects, that 5 and 4, 5 related to the actual information and 4 related to deemed information. You explained it very in lucid manner. I think I hopeful that his explanation and submission will helpful to our members to understand the topic very well and to support and guide our clients in good way. So thank you very much, sir, for sharing your time and wisdom with us. Big round of applause to our learned speaker. Sir, I'm confident that topic is not ended. We would need you again and again to address our learned delegates. Thank you, friends. We will have a tea break now. Right, sir? We are taking tea break. Yeah, 10 minutes tea break. And we'll be back around 5:45. Thank you so much. एक मिनट मैडम ने फोटो लिया नहीं मेरा अरे मैम ये बंद कर
Honorable Chairman of the Western India Regional Council, CA Murtuza Kachwala sir. My colleague in council was joined online from Surat, Ishwar Jivani bhai. Seniors and friends, very good evening to all of you. Welcome to this 4th technical session. Very, very important session to my mind. We have been seeing a lot of actions being taken by ED, and a lot of time a question comes to our mind that we as a consultant, we as a chartered accountant of the person on whom the ED has taken any action or any inquiry, are we going to be affected or what is going to happen to us? And a lot of time the client is, not bothered about those inquiry or those proceedings, but we as a chartered accountant are under pressure. And we have seen the recent few cases where client going and telling that oh, this was advised by a chartered accountant, and then CA also coming into trouble. So we need to be very, very careful when we are advising something on the client through email, through WhatsApp, or over the phones, or in the personal meeting, and let client take a decision about the various risk in the taxation, various risk in the other laws. Otherwise, these type of problems arises if client goes and says that the into ED, I was, really, it was worth knowing for me also. In fact, I was trying to search last year's few CAs were asking, कि ED का practice कोई करता है क्या? And this time we have him here. He is having his chamber in Mumbai as well as in Pune. Before I request Ishwar to, do this onerous task of introduction of our worthy speaker, I'll request our Chairman, CA Murtuza Kachwala, to present a memento to the speaker, CA Sagar, Advocate CA Sagar. I'll request my council colleague Ishwar Jivani from Surat, Regional Council member, to introduce our speaker, CA Sagar Tilak.
Thank you, Ketan Sayaji, for giving me an opportunity to introduce our today's speaker, CA and Advocate Sagar Tilak. Respected Chairperson CA Murtuza Kachwala ji, RCM and Vikasa Chairperson CA Ketan Sayaji, and my respected colleagues, very good evening to all of you. It gives me an immense pleasure to introduce our today's speaker of this session, Advocate Sagar Tilak. He has completed his graduation as well as Master in Commerce from BMCC University of Pune. He is also a chartered accountant. He is a fellow member of our institute. He has completed his graduation in law from Yashwantrao Chavan Law College, Pune. After practicing as a chartered accountant for over 12 years, he has entered into the legal profession to practice as an advocate. He has been specializing in the area of economic offences, including Prevention of Money Laundering Act, Benami Act, Prevention of Corruption Act. He appears regularly before the Sessions Court, Special ED Court, Mumbai and Bombay High Court. He has been extensively working in the area of Benami law, right from the introduction of Benami Transaction Prohibition Amendment Act 2016. He authored a book named Practical Guide to Prohibition of Benami Property Transaction Act, which is one of the best-selling books on the subject. He has also authored several articles for the journal and newsletter published by ICI. He has also written articles for online portals and blogs. Advocate Sagar has been a speaker at various forums of International Fiscal Association, that is IFA, our institute ICI, ICSI, and Chamber of Tax Consultant. With this, I introduce before you our today's speaker, Advocate Sagar Tilak ji. I request sir to take the session ahead. Thank you. Thank you all.
Request all the participants to welcome him with a loud round of applause. All yours, please.
Thank you so much for the introduction. So the topic for the day is economic offense laws. So many of you must be thinking as to how is it relevant to us as we practice in the income tax, we do audits. How is it relevant to us and is it really relevant to us? So by the time I end the session, those who think that why is it relevant to us would certainly understand that it is, this is most relevant to us. Because a chartered accountant plays two roles. He has to play two roles in case of all the economic offenses or the proceedings by different agencies under economic offense laws. One, he has one role to play according to which he has to protect and defend the client. And second, and the most forgotten role is to protect himself. So he has to play dual role. Today, we will discuss about the various acts. When we say the economic offense laws, that will primarily include Prevention of Money Laundering Act, PMLA. And as we know, we have the Enforcement Directorate as the administrators or the regulators for the act. Prohibition of Benami Act, we have BPU, Benami Prohibition Unit. As we know, it is nothing but another wing or a separate unit of the investigation wing of the Income Tax Department. Black Money Act, we again have income tax authorities. Income Tax Act, of course, income tax authorities. I have intentionally taken Income Tax Act also as an economic offense law for a reason that, as we know, in the recent years, Income Tax Department has lodged various prosecution cases under Income Tax Act. So here we will be discussing not about the penalty, not about the assessment, nothing, but we'll be discussing about the punishment and other possible consequences under all these different laws. So Income Tax Act, in a way, considering the prosecutions and the punishments, I have also included in today's list of the economic offense laws. Then GST, as we know, there is power to arrest as well as the punishment under the GST Act, and GST authorities very actively using those powers under the GST Act. Again, the Companies Act, there is Serious Fraud Investigation Office, SFIO, which deals with the cases under the violations of the provisions of Companies Act, and SFIO investigates into the documentation and the role of chartered accountants, of course, of the companies as well. So SFIO is the authority that regulates the Companies Act. And last, Foreign Exchange Management Act, FEMA, again, regulated by the Enforcement Directorate. So these are the different authorities and these are the different laws. So here we see there are different laws, different authorities with different approaches, and they have different powers as well. But the consequence which we are discussing today is about the punishment. So what are the broad range of punishments under these acts? I have not specifically considered each and every punishment, each and every offense under these laws, because there are multiple offenses and multiple punishments defined under each law. But just to give you the broad picture as to what is the range of punishments under these laws, under Prevention of Money Laundering Act, the punishment ranges from 3 years to 7 years. Benami Act, it ranges from 1 year to 7 years. Black Money Act, it ranges from 6 months to 7 years. Income Tax Act, it ranges from 3 months to 7 years. Under GST 132, we know it ranges from 1 year to 5 years. And under Companies Act, 6 months to 10 years. So this is a broad range of punishments that we see. And then what is the purpose of looking at the actual range of this punishment is what we will understand here. There is a common misconception among all of us. I remember the days when I was just practicing as a chartered accountant about the misconception as to what is a bailable offense and what is non-bailable offense. So what is a bailable offense and non-bailable offense is given under CRPC, Criminal Procedure Code. There is Schedule 1 to the CRPC, which is in a tabular form, which specifies and considers each and every offense under the IPC, Indian Penal Code, and also specifies whether the said offense is bailable or non-bailable. So Schedule 1 of CRPC deals with classifies whether the offense is bailable or non-bailable. We just discussed about various statutes under economic offense laws, but then whether each statute specifies whether the offense under that respective law is a non-bailable offense or a bailable offense. Not the case. There are certain statutes like Benami law does not specify whether the offense is a bailable offense or non-bailable offense. In such cases, what do we do? Because there are statutes which do not specify it. So in that case, there is a second schedule to CRPC, according to which the offense less than 3 years is a bailable offense. An offense which is punishable for a period of 3 years or more than that is a non-bailable offense. So with this classification, you would understand the significance of the earlier slide, that the range of the punishment under all these statutes is covered from right from 6 months to 7 years or even 10 years sometimes. And if that particular statute does not specify whether the offense is bailable or non-bailable, then we need to refer to the second schedule of CRPC. So even the offense punishable for a period of 3 years is also non-bailable offense, because second schedule says that offense punishable for a period less than 3 years is a bailable offense. But then again, next thing is if it is bailable or non-bailable, the misconception that the bailable offense is an offense where accused gets the bail, and non-bailable offense is the offense in which accused does not get a bail. That's a misconception. The reality is that bailable offense is an offense where getting bail is a matter of right. So the accused can claim the bail as a matter of right. Whereas in case of a non-bailable offense, the bail is given at the discretion of the court. So you have to apply to honorable court for the bail. Bail considers the merits of the case, and based on that, court grants the bail. So non-bailable offense does not mean that the person is not entitled for bail at all. Recently, just the incidents recently, I was appearing before honorable court in one of the anticipatory bail matters. And one of the officer from one of the agencies or someone asked my junior in the courtroom that you are not going to get bail. Why have you applied for the bail in first place? Junior asked as to why I'm not going to get a bail. He said, because the law is very clear. It says that the offense is non-bailable. So you should not have applied for the anticipatory bail at all. Actually, what are the conditions for applying for anticipatory bail is something which we look at a later stage. But that is the misconception is to that level, that non-bailable offense, the person is not entitled for bail. So that's a misconception. So you have to apply for the bail to the court, and then court grants you the bail based on the merits of the case. Arrest versus prosecution. As I said, there are different laws and different authorities with different powers. So there are different authorities and different acts which empowers that authority with a power to arrest. So the laws which we just saw and the agencies governing those laws, Enforcement Directorate, GST and SFIO have power to arrest. And of course, the Income Tax Authority does not have power to arrest under Income Tax Act, as well as the Benami Prohibition Act. So when we are dealing with the proceedings under different acts before these authorities, we need to be extremely careful about the powers of the authority we are dealing with. So in case of power to arrest, the authority can arrest a person if certain conditions are complied, then that authority can arrest a person. Whereas in other cases like Income Tax or Benami Prohibition Act, in those, or even the Black Money Act, where there is no power to arrest, in those cases, the agency or the authority investigates the issue, prepares a documentation, and then they file a prosecution complaint before honorable court. Then court issues takes the cognizance and issues the notice, and then the trial is conducted before the court. So ultimate consequence of punishment or conviction or acquittal is same, but there is a difference that if you are dealing with the authority which has power to arrest and the authority which does not have power to arrest, the authority if does not have power to arrest, then they go with the prosecution complaint route. In any case, prosecution complaint is filed, but in the cases where there is no power to arrest, in those cases, the proceedings start with the prosecution complaint. Otherwise, the proceedings may start with the arresting a person. The important part is about burden of proof. The basic principle that we know is that the presumption of innocence. We treat the person as innocent unless and until he is proven guilty. That is a basic principle of criminal law. The same time, the Evidence Act also specifies the burden of proof, as the burden of proof is on the person on the party that asserts the affirmative, because negative cannot be proved. So for example, authority says that you have committed the offense, then the burden of proof is on the authority to prove that the offense has been committed or that illegal transaction has been carried out, which is a usual burden of proof. But considering the gravity of these offenses, the lawmakers in many of these statutes have specifically inserted a provision which reverses the burden of proof. So here there are acts in which the authority is not going to prove that the person accused is guilty of the offense. On the contrary, the accused will have to prove that I am not guilty of the offense and I am innocent. So this is what. So for example, there are different sections and by different ways these provisions have been inserted in various statutes. Let us take an example of Prevention of Money Laundering Act. Section 24. It says that whenever any person who is charged with an offense of money laundering, then it shall be presumed, unless the contrary is proved, that the proceeds of crime are involved in money laundering. So it says that whenever someone is charged with the offense of money laundering, then the proceeds of crime, it shall be presumed, unless the contrary is proved, that the proceeds of crime are involved in money laundering. I'll just first, before going into the details of it, I'll just take a minute to explain and discuss what actually the money laundering is. We often see now the money laundering term or the topic has just become like a coffee table discussion topic. Whenever something illegal transaction or wrong transaction has taken place, everyone says that money laundering has taken place. We see everyone everywhere saying that, no, this is a money laundering case. So what actually is money laundering as per the Prevention of Money Laundering Act? So according to Section 3, in simple words, it says that if there are tainted funds and there is a transaction or an attempt to transaction to show that those tainted funds are untainted funds. So what are tainted funds? It says tainted funds are proceeds of crime. What is proceeds of crime? Proceeds of crime is defined under Section 2U of PMLA, which says that the proceeds of property obtained out of criminal activity pertaining to the scheduled offense are the proceeds of crime. So what are the scheduled offenses? Scheduled offenses are the offenses or different statutes given under the first schedule to the Prevention of Money Laundering Act. There are 28 statutes. There were 28 statutes initially, and now after amendment, there is 29th. So now we have 29 statutes. Those are scheduled offenses. So proceeds of crime means the funds or proceeds generated out of the criminal activity pertaining to the scheduled offense. So there has to be the criminal activity or offense committed under those statutes. So even the IPC and all those are scheduled offenses, and the proceeds should have been generated out of that. Say, let us take an example, typical cheating case, 420. That is a scheduled offense. 420 of IPC cheating is a scheduled offense under PMLA. So if the proceeds are generated out of the transaction or out of an offense which is liable for 420 under IPC, then those proceeds are proceeds of crime. And then subsequent transaction of showing that as untendered is effectively going to be the money laundering. So this is what all money laundering is all about. So for that, if you can see, scheduled offense has to be committed. It should have generated some proceeds of property. Those are proceeds of crime. If the proceeds of crime are there, then the presumption under section 24, which we just discussed, will operate to say that those proceeds of crime will be presumed as used for the purpose of money laundering. It is everywhere said that whenever someone is charged with money laundering, the reverse burden of proof would apply. In my personal opinion, no. Unless the proceeds are proved as proceeds of crime, this presumption shall not operate. Because the presumption is a presumption of money laundering, according to which the proceeds of crime to be presumed as used for the purpose of money laundering. So for that, there is initial burden of proof on the agency to prove that those are proceeds of crime. Again, going back to the example of 420, they were just proceeds. But initially that predicate offense will have to be proved to show that the offense of cheating has taken place. If legislature wanted that as a presumption, then legislator would have put the words like the proceeds to be treated as proceeds to be treated as money laundering. No, the wording is that proceeds of crime are used for the purpose of money laundering. So there are three aspects: proceeds of crime, and then money laundering. So this is about what the money laundering is. So section 24 gives you the reverse burden of proof. But if you ask me, that will operate at a later stage. But once there is proceed of crime, then this presumption will apply. And then the accused will have to prove that those proceeds of crime are not involved in money laundering. Now going to the Benami Act, the act is silent about burden of proof. There is cutting of judgments from Honorable Supreme Court and various high courts about the burden of proof under Benami Act. The Evidence Act will prevail, which says that the burden of proof is on the party that asserts the affirmative. So the Benami Prohibition Unit will claim that this is a Benami transaction. So the burden of proof will be on the BPU to prove that this is a Benami transaction. And the party will not have to prove that this is not a Benami transaction, because BPPT is silent about it. Now, this, I would say this is like a family of acts: Black Money Act, Income Tax Act, and GST Act, where there is a presumption of culpable mental state. So actus reus and mens rea are the two essential ingredients that constitutes crime. So there has to be an action and there has to be the guilty mind. So action is always detected. For example, income tax return not filed. So that is an action. But mens rea is a guilty mind. So how do authorities prove that the assessee had a guilty mind not to file the return? He has intentionally not filed the return. So how do authorities prove that? Maybe to encounter such situations, this is a family of acts according to which there is a presumption of culpable mental state. In simple terms, it says that in a way, if such offense is committed under this act, then the element of mens rea is taken care of. It states that it shall be presumed that the accused had the mental state to while committing this act. So mens rea is taken care of. So burden of proof is reversed. And again, it is at a higher threshold. As we say, the burden of proof in criminal law will have to be discharged beyond all reasonable doubts. So whenever prosecution charges you with a criminal case, they will have to prove the case beyond all reasonable doubts. Similarly, in case of this reverse burden of proof, this presumption of culpable mental state, there is subsection which says that the burden is on assessee to prove his innocence beyond all reasonable doubts and not by preponderance of probabilities. So even it is at a higher threshold. Even the constitutional validity of section 278E in case of Income Tax Act, culpable mental state had been challenged before Honorable Madras High Court. There is a wonderful judgment of Selvi Jailalita. Do read the judgment. That's a long judgment, but it has upheld the constitutional validity of this provision of presumption of culpable mental state. So there is no more scope to challenge the constitutional validity. I repeat, it is a Selvi Jailalita judgment. It is a wonderful judgment on this topic. So this is about the reverse burden of proof. But again, going back to the basic, the initial on the authorities, I would say. Let us take a simple example. As I said, income tax return not filed. How authority will prove that there was a guilty mind? That is the reason why the burden is reversed. That assessee has to prove that there was some reason, difficulty, maybe his illness or someone in the family was unwell or something like that, whatever may be the reason, or say the office or home caught fire. There may be multiple reasons. But those reasons will have to be proved beyond all the reasonable doubts by the assessee. But before that, the income tax return is not filed is the initial burden on the income tax department. So before taking the reverse burden of proof, there is always initial burden of proof on the authority. So I just gave the simple example where the tax return is not filed, which can easily be, that burden can easily be discharged by the income tax department. But there are other offenses like falsification of accounts, bogus bills and all that. In those cases, it is not the burden initially on the assessee unless the authority proves that that offense has been committed. So the subsequent burden is on the assessee. Now, as I said, different authorities, different acts, they also have different powers. Now, I have just selected a few powers which are of some great relevance to us as a chartered accountants. All these powers under all these acts are pretty similar. Say, take section 19 of Benami Act, or take 131 of Income Tax Act, take section 50 of PMLA, or take section 8 of Black Money Act. The powers of authorities under all these sections and all these acts are pretty identical. These are nothing but, if you look at the CPC, these powers are nothing but the powers of the civil court. So all these authorities are empowered with the powers of the civil court. And if you understand the gravity of it, once they are empowered with the power of the civil court, it means they have power to issue summons. They have to administer oath and record a statement under oath. And all the proceedings before these authorities, considering these powers under these acts, these are the judicial proceedings. So now, if we talk about recording the statement, we will discuss different aspects of it at a later stage with some practical examples. How does it affect us? How does it affect the client? Because those are the judicial proceedings. So these authorities have powers similar to the civil court. Now, power to search. Similarly, these authorities can very well conduct search. We saw the list of acts, but I must give you a clarity that under the Benami law, the authority does not have power to search, because recently someone said that the authority said will conduct search under the Benami Act. No, they are not empowered to conduct search under the Benami Act, but of course, under all other laws, they can very well conduct the search. Now, power to arrest. In case of fiscal laws, I believe there are two different approaches. One, by initiating the proceedings by arresting the person, and second, by filing the prosecution complaint. In case of fiscal laws, in my opinion, prosecution complaint is always a better route, because the person might have committed a serious offense, but that is not a heinous crime that he may damage the society if he is free. But as I said, Enforcement Directorate, SFIO and GST, these are the authorities who have power to arrest. So authorities under these acts, they typically record the reason in their file as to, what is the reason to believe that the said offense has been committed by so and so person, and they arrest the person. So you should always be careful while dealing with the authority with a power to arrest. Now, power to summon and record a statement. As I said, these authorities are empowered with the powers of the civil court. So they can administer the oath and record the statement. Now, I must difference between the statement recorded under 133 capital A of Income Tax Act and 132(4) or 131 of Income Tax Act. So statement recorded under oath and otherwise. So all these are the statements under these acts which are going to be recorded under the oath. And now, a retraction of those statements is extremely difficult. So whenever these authorities issue the summon, the person has to appear before these authorities in person. So it is extremely important as a chartered accountant, because whenever any of these authorities issue the notice, the client first comes to the chartered accountant and not the advocate. Because we are the chartered accountants are the, we are in the control of the financials and accounts of the client. So preparing client for attending the summons and the office is extremely important, because the statement which gets recorded during the proceedings with these authorities is of utmost importance. Because once the statement under oath is recorded, the retraction is extremely difficult. It becomes admissible before the court, and the case is entirely framed and prepared based on these documents, because retraction is not easy. Again, there is another dimension to it, whether the statement recorded under this, under any of these acts before these authorities, whether it is to be treated as a confession or not. As you must be aware about Section 25 of the Evidence Act, about the extrajudicial confession, that in simple terms, the confession given to the police officer is not admissible. Rather, police have to prove the case. Whether these authorities which we discuss are the police officers, and the statement recorded before them is a statement recorded before a police officer or not, because these authorities are given all the powers of the police. If the courts take a view that yes, these are the police officers because they are given all the powers of the police, then the statement recorded before them under these provisions may not be admissible, and in a way retraction would be possible. But this issue has been litigated and there are contrary judgments. So for a moment, as a chartered accountant, let's make sure that this is going to be the admissible piece of evidence. So there is extreme need to prepare a client for recording a statement. So for that purpose, let us assume it is a confession. Now about the attachment and prosecution, I will not deal with the procedural aspects and will not go into the sections like how the provisional attachment is made, when made, how many days are given to pass the order. No, I will not go into those details, but give you some practical perspective. As I have often faced a situation when someone approaches with say Benami or PMLA matter. See, there are two consequences under particularly PMLA and Benami Act. One is about the confiscation of the property. That is one outcome of the act. And second is about punishment. These are two different aspects. Say under Benami prohibition or even PMLA, whenever agency starts investigation and they see there is some exposure to it, the first thing they do is they provisionally attach the assets. Then they will collect the documentation, record statements, and subsequently they will send it for the adjudication to the adjudicating authority, who will hear the matter, and on merits they will confirm the attachment. And then we go to the appellate tribunal, and then from appellate tribunal to the High Court. So this one stream, there are many professionals who are under the belief that these are the only proceedings under these acts. The answer is no, it is half truth, because all this route of going from adjudicating authority to appellate tribunal and to High Court, this is about the confiscation of the property. This is about dealing with the property. Naturally, they provisionally attach the property immediately just to protect the interests of the government so that the person does not dispose of the property. But this deals only with the confiscation of the property. What about the punishment? What about the prosecution? Which is a parallel thing. So all these agencies parallelly initiate the prosecution proceedings against a person. So if you see any of these acts, you will find the provision of special courts. We always wonder that why there are special courts when there is adjudicating authority, appellate tribunal. But that's the point. They deal only with the confiscation of the property part of it. They don't deal with the punishments. For the purpose of punishment, those agencies file a prosecution complaint before these special courts, and then special court goes through the evidences, the trial is conducted, and decide whether the offense of money laundering or Benami has been committed or not. And that way the punishment has been granted, or conviction or acquittal. That is the outcome of it. But the important point is, I have practically seen everyone focusing on the adjudicating authority and appellate tribunal, and the appellate tribunal takes a lot of time these days, because for the lack of quorum, it has not been functioning for quite a bit of time. But I have seen situations where the people were completely ignorant. They were absolutely not aware of the proceedings going before the special courts. For some reason, the clients were not available at the registered address, so they did not even receive the summon, and multiple dates had already happened before the special court. So as a chartered accountant, I'm sure that you'll be taking care of the adjudicating authority and the proceedings before appellate tribunal, but at the same time, you should be vigilant and check as to whether the prosecution complaint has also been filed before the special courts or not. So that is the significance of the special court in case of these statutes. Now, initially I mentioned that there are dual roles. One is to defend the client and the second is to protect chartered accountant himself. I would say this is most forgotten aspect by a chartered accountant, that he has to protect himself. Because overall, with the urge and sincerity, he defends the client. Commonly, he forgets to defend himself, which is extremely important. I would say he plays such a significant role in all the financial transaction, reporting compliances and all that. So knowingly, unknowingly, chartered accountant takes the lot of responsibility or the, I won't say the ownership, but responsibility of the financials and financial transactions of the client. Not just the financial transactions, but chartered accountants are also appointed as independent directors on the boards of the company. So they regularly attend board meetings. As an auditor, you attend the audit committee meeting. There are so many instances where let us take an example. Suppose you are independent director in a company, and you have attended a board meeting. Certain related party transactions are approved in that board meeting. Later on, those transactions turned out to be the tool, mechanism, or route to siphon off the funds from company to, say, the promoters. Then the agency started working on it, say SFIO or Enforcement Directorate. They check the minutes, who attended the meetings, and the independent director, you being the independent director, attended the meeting. And you are summoned and asked the question, how and why these transactions are approved. Very common situation. Those companies where such issues have happened and directors unfortunately have issued the summon, I have seen people saying that, no, I was not aware. I did not vote. I did not give my consent. I was just sitting silent. So you need the particular resolution, but you are present in the meeting. So your silence is treated as your consent unless you expressly dissent. So if you are sitting in a board meeting where the related party transactions are approved, and if you do not expressly record your dissent to a transaction, or you do not specially go into the genuineness of those transactions, the necessity of those transactions while approving those related party transactions, there is no way out otherwise. So being an independent director, or even similarly, if you are a statutory auditor and attending audit committee meetings, so again, the documentation is the key. So do you really keep copy of those minutes? Do you really go and revisit the minutes? If you had asked certain questions, do you really go, when you go for the next board meeting, do you really check minutes of the earlier meeting, whether your dissent was recorded, or even the questions those you asked? You might have given some recommendation about maintaining certain documentation for that transaction, whether those are documented in the minutes or not. So I would suggest in such cases, wherever, if you are on the board, do maintain copies of the meetings, because I see subsequently when authorities ask for it, they always have copies of the meetings taken from other sources, but the director does not even have the copies of the meetings to defend himself. So my suggestion would be, always keep your documentation very strong, always maintain copies. After going for the next board meeting, always check whether your comments or remarks, questions in the earlier board meeting are recorded or not. So that is something which you can be vigilant about when you're acting as an independent director. Now the next critical part is about the projects reports and various certifications, not just the project report, because these are very common cases these days because of the criminal actions taken by various banks, cooperative banks, and even otherwise NBFCs and even the regular banks. Project report is submitted. Chartered accountant prepares it, sometimes put his stamp on it. He signs it at the request of the client. Out of love for the client, he signs it, because those are projections provided by the client himself. Subsequently, suppose the bank gives a disbursement. Subsequently, suppose that project is failed and bank repayment is not proper. Bank takes the action and realizes that the funds are diverted, misutilized, or something else. In that case, what went wrong? So when the documentation is scrutinized, the person or the client is summoned, arrested, the documents are found, and the CA has signed it. So in a way, when you sign, you certified, you take the ownership of it. So you say that, do you really take the counter certificate from the client for the projections? Because in many cases, client gives the projections and you compile it as a part of project report. So what documentation do you prepare? Do you really prepare letter of engagement in such cases to fix your role and responsibility? So that is extremely critical. Even in case of utilization certificates, in case of project loans, when the disbursements are done part by part, and the utilization certificates are issued by chartered accountants. So do we really take the counter certificate from architects, chartered engineers as to what percentage of work is really completed on site? There are so many cases where the banks have taken action because chartered accountants have issued utilization certificates and actually the work has not taken place on site. And when the question is asked, the chartered accountant saying that, I am not the expert. I have just signed it financially because the money has been disbursed by the bank and has been paid to the vendor or the material supplier or to the contractor. But whether the work has taken place at the site or not, in such cases, the banks make chartered accountant who has certified the utilization certificate a co-conspirator. And rightly so, because they say we made the further disbursement based on the utilization certificate because the funds which have already been disbursed were utilized for the said purpose. So do we really take care while issuing the utilization certificate? So my suggestion would be in such cases, maybe a site visit or taking counter certificate from the architect or chartered engineer before you actually issuing the utilization certificate would be of great help. And often with respect to these issues, I'm always asked a question as to, whether this will be covered under the abatement or the advisory services that we give. And suppose later on that structure that we advise turns out to be some illegal structure or irregular structure, financial structure or model, then whether we will be covered under the abatement or not, whether abatement will be applicable. Everyone is very interested about abatement because if you see most of these offenses, the related party or someone will be treated as an abator in the case or will be charged with the offense of abatement. So everyone asks about abatement. I must quickly tell you about the abatement, which is under section 107 of the IPC. The offense of abatement has 3 limbs: 1, 2, and 3. Under the 1, the person instigates the other person to commit an act. That is 1 limb. Second limb is about conspiracy. If you conspire with other person to commit an illegal act. And the third is if you aid or assist the other person to commit an act. Among these 3 limbs, if you see the second limb, it is about conspiracy. Practically now you can say abatement for the purpose of conspiracy in a way is now redundant. There is a reason to it because offense of abatement under 107 of IPC was introduced when the IPC is originally enacted in 1860, when there was no offense of criminal conspiracy under 120B. Criminal conspiracy 120B has been inserted under IPC in year 1913. So for the acts or say offenses from period 1860 to 1913, when there was no criminal conspiracy offense, the criminal conspiracy was covered under abatement. So now what I see practically, authority don't charge you for the abatement, but they charge you under 120B of criminal conspiracy. But there is third limb, which I said, if you have assisted or aided a person to commit an illegal act, there is certain exposure. First limb, instigating someone, that usually we may not be, as a chartered accountant, may not be covered under that. That usually is applicable in case of bodily or physical offenses, instigate someone to kill someone. So that case, instigation may be relevant. But in our case, maybe the third limb, if you assist someone or aid someone to commit an illegal act, in that case, there is definite exposure. But practically what I have seen is agencies usually charge you under 120B, criminal conspiracy, because that is a simpler thing or more vulnerable for a reason. Criminal conspiracy is defined under 120 capital A of IPC. Simply it says that when 2 or more persons agree to commit an illegal act or legal act by illegal means, then it is a criminal conspiracy. So what it requires, what offense requires is mere agreement. no action in line with that agreement is necessary. For example, while discussing the profitability of the company or introducing certain invoices or expenses in the books, there is some discussion about, say, accommodation entries or bogus bills. So the chartered accountant may not actually facilitate accounting for those entries or arranging for those bills. But even if tomorrow clients record a statement that, I did this in consultation with my chartered accountant who advised me that there is necessary to record, expenses to this extent. If they're now recording this, inflating these expenses is an illegal act, then in a way you are assisting them. Are you assisting them? No, because you are not arranging for the invoices. But is there a criminal conspiracy? Because you agree to commit an illegal act, though you did not act in line with the agreement. So I have practically seen all the authorities invoking 120B instead of abatement under 107. And again, because 120B is a scheduled offense under PMLA, Enforcement Directorate invokes PMLA also. So whenever you deal with these acts, it is very important actually to see whether the offense under 120B is charged with, then Enforcement Director also comes into picture. So agreement can be proved only if the client records statement to that effect. So that again, allow for the client. So you might have advised client for his good, but ultimately if he records a statement before the agency that, I have done this at the advice of my client, then certainly you are definitely in trouble. Now, these are the action points. I would say some do's and don'ts with these points being the last slide. The vicarious liability. There is no vicarious liability under the criminal law because one person cannot be punished for act of another person. That is what simple vicarious liability, which is valid in the civil law, but not under the criminal law. But if you look at any of these statutes which we are discussing, certainly there is a section which talks about offense by companies. So in all these cases, why I'm discussing vicarious liability is in the context of a director of a company. Suppose some scheduled offense has been committed, some transactions are entered by the company, then can director be charged for the said offense? This is a question. Let us take an example of GST Act. Now, offense by a company, a very common case of, say, bogus or ineligible input tax credit. These days, these cases are very common. Now, if illegal or ineligible input tax credit has been availed by a company, can director be prosecuted for it or director be straight away arrested for this? Because I have seen cases where director is straight away arrested for this. Now, why this is extremely relevant for chartered accountants? Because chartered accountants represent before the authority for that person right from the first notice, when they ask you for copies of invoices and then copies of physical movement of goods and all that. So do we really take a position that the person is just a director and he cannot be charged with the criminal offense? Say 137, section 137 of GST is about offense by companies. So it says that the person who is in control of the affairs of the company can be charged with the said offense. So that 137, I would take analogy from section 141 of the Negotiable Instruments Act. Offense by companies is, that provision is under all these statutes. But why I'm drawing analogy from 141 of Negotiable Instruments Act is for a reason. This is about check bounce cases. There is a settled principle of law which says that a person, a director cannot be, criminal charges cannot be brought against the director merely because he is a director of a company. But there has to be evidence with respect to his specific involvement in the committing of that offense. Say, for example, some check bounce cases in case of a company, a check is bounced. Is it right to bring criminal charges against all the directors just because they are directors of a company? So there are stages. If they are director, whether those directors are in control of the affairs of the company, that is a first question. If yes, then yes, they are vulnerable. But the second question, is there anything on record to show that there is involvement of those specific directors in the offense, like whether that director has signed the check? If yes, then yes, he will be charged under the Negotiable Instruments Act. Similarly, in case of companies, if He's a director in case of ineligible input tax credit. If he's a director, whether he can be charged with the criminal charges merely because he is a director of a company? No. Then whether he was a director in control, whether he was a whole-time director or independent director, what was his role? Then if he was a director in control, he was a person in control of the company, then still is there anything on record with the GST department to show his involvement in the alleged offense? This is a very important question which I would suggest every chartered accountant representing his client before GST authority must ask, must put on a record, because these are various issues which I am seeing even in the further litigation is not brought forward. Because whenever any company is issued notice, the director runs to the office. And I've seen that, the chartered accountant accompanies the director, and in many cases, director is initially detained and after a few hours is arrested. But if this argument is taken in the initial stage of the proceedings itself, that he is a director, but he was not actively involved. There is nothing on record whether the fake invoices or say the input tax credit which has been approved, whether he has made payment to those parties. What is on record to show that that director has direct involvement in the offense? These are not just the questions to be asked in the court, but I would suggest that these are the questions to be asked to the authorities at the initial stage of the proceeding itself, which may help really the client to, in a case to protect himself from the arrest or subsequent punishment provisions, or at least it may help subsequently in the court that this issue was brought before the authorities at the initial stage itself. So vicarious liability to that extent is extremely important. Now, again, the director, I have seen cases where, the defaults, the director is charged with the offense for a period even when he was not even a director, he had resigned by then. So please take care of these things. There is no criminal liability under the, there is no vicarious liability under the criminal law. You need to check actual role of a director. Whenever any of these agencies start issuing summon, you please check the involvement of that particular director in the said offense. Now, compounding of offenses. Again, I understand there are compounding provisions under income tax as well as the GST, even FEMA. My suggestion would be, after representing clients in the courts, my suggestion would be, please don't look at the compounding fees. I understand the compounding fees are high, but wherever possible, please convince client. If you see that the case is not that good, or you do not have really, as you know, now there is reverse burden of proof and you have to prove your innocence beyond all reasonable doubts. If you don't see a strong case, please encourage client to go for the compounding under GST, under FEMA, because of this reverse burden of proof, the rate of conviction is going to be extremely high. And what we see in the court is, after listening to all your arguments, the court may saying that that is fine, but there is reverse burden of proof and you have to prove your innocence beyond all reasonable doubts, and we are not convinced with this. So wherever there is a scope for compounding, please encourage clients to go for the compounding. Now, I would say the most important part of attendance in response to summon. Now, when any of these agencies issue summon, I have not seen the summon which allows the authorized representative to appear. In all those summons, the person is asked to appear before the authority on so and so date, so and so time. The in person / through authorized representative is already scratched. So the person has to appear before authority in person. Now, first thing, and the most important thing is, never dodge the summon. Because you never know the purpose of issuing the summon. There are cases that the summon is issued to cross-verify the transaction of someone else. But you dodging the summon unnecessarily catch the attention. So first you need to understand why the summon is issued. And it is always not that you first go and the client attends the office and he gets arrested. No, it does not happen that way. We know even those clients where there is such vulnerability, but otherwise no. So first thing is, never dodge the summon. Second thing, as we have already discussed, the importance of recording the statement before them, before the authorities. It is extremely important as to preparing client for the particular hearing. There is no need to hide anything. Only truth is to be stated, but only relevant truth is to be stated. The problem is that because of the excitement of knowing the facts and the situation of innocence, some unnecessary or unwarranted information is provided, which may create further troubles. So it is extremely important to prepare client with the question answers right from the background, what you do, what you don't do, and always prepare a submission. Because I have seen that, everyone prepares just a documentation. So whenever they'll ask questions, I will give a paper. So it doesn't happen that way. So always make a submission, give background of the client, and then you need to prepare a submission. And when you respond under one act, when the statement is recorded under one act, it is extremely important to evaluate the possible consequences under other statutes. I'll just give you an example. Suppose the client is investigated for the corruption charges earlier, and he has been in a way given a clean sheet by, say, EOW or Enforcement Directorate. Subsequently, after a few days, usually the authorities follow each other. Subsequently, suppose Income Tax Department conducts search in the premises of the said client. While recording statement under 132(4) or 1, people, just to buy the peace of mind, decide to declare certain amount. Okay, I'll declare that, these are the bogus invoices or these are the bogus expenses. Everyone thinks that, this will be treated as unexplained expenditure under 69C. I will pay the tax and will buy a peace of mind. So that may give you peace of mind or may give you some relief in case of a penalty. But then as soon as you record a statement, after a few days, you will receive again a notice or someone from EOW or ED, and they will ask you as to what have you done with the cash that you have generated by recording those bogus expenses. So these are the typical things. Whenever you record a statement under one act, you need to be careful what are the consequences under the other act, or even what statement is recorded. Say these days, many people have received notices from Enforcement Directorate for the foreign bank accounts which were not disclosed. So they typically ask for a copy of the income tax return in foreign bank account is not disclosed. So the statement that you record, those are FEMA proceedings. So statement that you record, so think now in case of undisclosed foreign bank account, what are different possibilities and what are different consequences? You are exposed to FEMA, you are exposed to Income Tax Act because there is income in that account which is not disclosed. Thirdly, you are exposed to Black Money Act, Foreign Undisclosed Assets and Income Act. And as I said, there are 29 scheduled acts under PMLA, and 29th act which is amended, 29th act in the schedule is Black Money Act. So ED will also invoke PMLA in those cases. So when you record a statement in such case, in case of a foreign undisclosed account, it may not be under, it may be under any of these proceedings, FEMA, Black Money, Income Tax and PMLA. So it's not just about thinking about the consequences or remedies under one act, but you need to give 360 degrees view and you need to check as to me recording this statement, what are going to be the repercussions under all these acts. So that is extremely important. And ultimately the statement, as I said, you record is a final statement. That is a statement under oath. I remember someone approaching me with there was some transaction carried out by the authorized signatory of the entity. And while acquiring that property, instead of that person signing and registering that document in capacity of authorized signatory, somehow that document was registered for some reason in his individual name. Say Mr. A as authorized representative of ABC Limited should have been the case. Unfortunately, that for some reason, I don't know, but that transaction of property acquisition was registered in the name of Mr. A only. Actually, the funds were provided by the company or someone else. So he was summoned and was called to explain the transaction, and he just, when he came to me, unfortunately the statement was already recorded, and the tone of the statement recorded was that, I have not paid a single rupee. The money amount has been paid by so and so person. I have just lent my name. I am not even enjoying the property. The property is even enjoyed by the person who has paid for it. I have just lent my name, nothing else. So this statement is nothing less than a suicide note under Benami Act. But this was the statement recorded, and unfortunately, I was told that his chartered accountant was accompanying him. So just imagine the kind of responsibility, because under the Benami Act, that's a different subject altogether. But under the Benami Act, there is no way out. Once a Benami transaction, I have written in my book also, once a Benami, then Benami forever. So once the property acquired is a Benami property, even if you sell it, the proceeds are Benami. If you convert it, that converted property is also Benami. If you decide to reverse the initial transaction of acquiring the property, still that retransfer is null and void. So once the Benami transaction is entered into, then it is Benami forever. And that transaction, if you confirm by way of recording such statement under one or the other acts under before one or the other authorities, then just imagine the consequences, because one after another you will start receiving notices from different authorities under different statutes. So just be very careful when you record a statement under one act, please give a thought and consider the consequences under other acts. Now, be careful while dealing with the agency with power to arrest. Be careful, it means, I'll take again an example of GST Act. They send you the summon, you attend, you provide the documents, you record a statement, but subsequently, if you know, you need to take, what is happening around you. When you know that people are getting arrested when they are called, you should be extra careful while recording a statement, not just recording a statement, while attending the office. And how you can be careful? You can explore the remedies like going for anticipatory bail, file writ in the High Court, exploring what are the other legal remedies you have. You straight away have seen cases, chartered accountant accompanying a person summoned going to the office, and later on he returning alone and the client is detained by the agency. So my suggestion would be you must explore the remedies, available remedies under the act. Again, dodging the summon is not the choice, but you can always ask for a time and then you can explore your remedies. As I said, whenever you submit anything to these agencies, make sure that you have the acknowledgement, because in many cases it happens that you feel that the issue is closed, and after a year or two or even maybe 3 years you receive notice or summon again for the same transaction, and being huge with multiple matters, they may not have your record submitted with them earlier because the officer is changed. So my suggestion is always to maintain take a physical acknowledgement. I know I have heard of many cases where they are reluctant to give the physical acknowledgement, but in that cases, someone usually have the email addresses of the agency and officer. So you can come back and always send them an email stating that, it was pleasuring attending the office today and these are the documents submitted. But always maintain a trail of the documents with you. Now the last part is about anticipatory bail. As I said, it is dealt with under section 438 of the CRPC. There are two necessary conditions for applying for anticipatory bail. One is that there has to be apprehension of arrest. And second, the offense has to be non-bailable offense. Because in case of a bailable offense, you need not approach the court. You can claim bail as a matter of right. So in case of anticipatory bail, when there are two options, I would say, if these two, you feel that these two conditions are satisfied, offense is non-bailable. Even in case of, again, going back to the GST, if the amount of, say, alleged tax evasion or input credit ineligible is less than 5 crores, then the offense is bailable. But if it is more than 5 crores, then offense is non-bailable. If while investigating the same set of companies, if someone else or some other director of some other company is arrested while investigating the same case, then you know that there is apprehension of arrest for your client also. So you must explore the possible legal remedies. So whenever there are these two conditions, apprehension of arrest and the offense is non-bailable, do explore the remedy of going for the anticipatory bail. And of course, the regular bail, where the situation that the person is already arrested and you are applying for the regular bail. So why everyone feels that, why the PMLA or these acts are draconian, why the person arrested does not get out. I'm sure many of you must be aware, but I'll just quickly explain why the reason. So why the people who are arrested by Enforcement Directorate or SFI are not released quickly. There is section 45 of PMLA, which has a dual condition. There is a litigation going on before Honorable Supreme Court. There has been litigation in the past, but there is a dual condition under section 45 of PMLA, according to which, while granting bail, the dual conditions are to be satisfied. Condition 1 is that the public prosecutor shall get an opportunity to oppose the bail, which is fair. And the second condition says that if the public prosecutor opposes the bail, then the court shall satisfy that there are reasonable grounds to hold that the person guilty is not guilty of the offense. So how at the initial stage of bail, without going into the merits, court would record that this person alleged with the said offense is not guilty of the offense? No court records such satisfaction. And that precisely is the purpose, that because of these dual conditions, people once arrested under these acts are not quickly released. And that really is the trouble. So the best thing is not to get arrested. So defend people, clients in such a way that the people are not arrested, because once they are arrested, because the constitutional validity of section 45 of PMLA had been challenged in the past. And in case of Nikesh Tarachan Shah, it was held that the provision is unconstitutional. So, but subsequently the amendment has been introduced, and now section 45 has been checked every day while granting the bail. And that is the reason why the people are not released by the ED courts under PMLA, because section 45 of PMLA and section 212 subsection 6 of Companies Act, these are identical sections with dual conditions. So wherever these dual conditions are there, yes, there is a problem. So as a chartered accountants, again, I would say that you need to be extra careful. You be very extra careful while certifying the documents. Documentation is the key. I would say, please do not keep blind trust on the client. And I would say, I'll just close with the quote similar to Mr. Narayan Murthy. I would say that, you do fall in love with your work, but never fall in love with your client, because you never know when your client will stop loving you and what statement he will record. Thank you so much. I think, thank you. I thank CA Institute for giving me this opportunity. I thank audience for the patient hearing.
Please hold on for 2 minutes. Let's respect the speaker. Please hold on for
Thank
2
you.
minutes.
Thank you so much. I thank my wife, CA Vinita, who has prepared the presentation. I'm really bad at it. And my office colleague, Advocate Sachin Hande, for helping me with the research. Thank you so much.
After listening to the CA Sagar Tilak. Yeah. Yes, sir.
Maybe in the night after and under coercion. So it is always desirable to retract the statement.
It is desirable, and I would say that even while recording the statement, sometimes for some reason you cannot record what really you want to record. So there is just remember, while guiding your client with that, there is always a last question asked at the end of the end of recording a statement. Do you want to state anything more? So while answering that question, you can always answer and state whatever you wanted to state in the statement. But yes, retraction is the issue. But again, they always use it because those are the judicial proceedings, and that is a statement recorded under oath. So retraction, yes, you can always retract, but admissibility is always in question.
Sir, interplay between Income Tax Act and Benami Act. Suppose I accept the loan or share capital as a bogus.
Yes.
So what is the interplay? How it goes taken under the Benami Act?
Correct. So as I said, so Benami Act, a different topic altogether, but I would say statement recorded under one act, as you said, under Income Tax Act, if you say that, no, this is not the loan, this has just been the money given by my friend or someone relative just to buy this property, because for some reason he could not buy it in his own name. So this is not income, but these are the, while dealing with the Income Tax Act, if this statement is recorded, this is not income, but these are funds temporarily received, and later on the property has been acquired by the person who had funded me this. So this may, help you maybe at times in escaping the Income Tax Act, but in a way you are admitting that you are Benamidar in Benami proceedings.
I was saying, I am accepting that this is not supposed to buy peace, etc. Yes, this alleged loan is not the loan,
Right.
It is my money.
Right.
So then how you look at in the Benami?
Yes. So if you treat this is my money, see, in case of Benami, the basic fundamental thing is that the payment has to be made by one person. Property has to be acquired in the name of someone else. And the person who has made the payment is enjoying the property directly or indirectly at present or future. When you own the property or own the source of property, then the Benami Act does not come into picture, because you say that, this is my money. So typically, during the IDS period, some raids were conducted and huge amount of cash was found. And we have seen people, the counting was going on for days and days. Usually people in those days used to say that, this money does not belong to me. I am just the custodian. while handling the search. But if you say so, you will be caught under section 2 subsection 9C of Benami Act. Because you are disowning the amount which is in your possession, so it belongs to someone else. So that way, in such cases, you may be in trouble under Benami Act. Yes, sir.
Because I am aware of some cases where while investigating one party, summons were issued to say 50 or 60 other parties. And the other parties against whom the summons have been issued, they are not receiving any communication from the ED. So how do we know that the matter is closed as far as the
Very genuine problem. So in such cases, if I can put your question, that there is one ECIR which has been created by ED, that is a main case which ED is investigating. Now, while cross-verifying or building the documentation, ED summons other 50 parties. When you receive the summon also, you receive that you are issued summon with respect to that ECIR, because every summon has ECIR number. So you attend the office, you submit the details. Those are for the cross verification. As I said, you provide the details. You are asked couple of times, your statement is recorded, and then over. You don't receive anything after that. Unfortunately, that is a drawback of investigation. Even under income tax, where do we, in case of investigation, you don't get any order or you don't get any closure. But that is usually comes through the interaction with the officer, and that client has to understand, because anyways you cannot appear before the agency.
The client keeps on bothering us ki yo kab matter khatam hoga, kab matter khatam
No.
hoga.
But yes, so when you receive a summon, that time only you need to tell the client that this is investigation. You don't get the closure order or assessment order. So you have to understand from the officer himself that now his investigation or his requirements are over, and they will call you whenever required. Usually when ED calls you, they either make you accuse or they make you witness. Usually. So if they make you witness, then they will record your statement as a witness, and you will be on a witness list when the prosecution complaint is filed with the ED court. So that is, in case if you want to find out whether the client is a witness or not, then that is the way to do, check with the court whether name of your client and statement is on the witness list in the case or not.
So initially the client was called as a accused, and later on it was discovered that he is
Yes.
not really the accused.
Yes.
Then the client was pressurized to become an approver. He said,
Right.
I cannot become an approver or anything. I've got nothing to do with it. My relation with the transaction is limited to this and this, which I've disclosed
I understand.
truthfully.
So that's what I said. Usually ED issues very focused with a specific information. They send someone. So they don't send anyone, who is indirectly or remotely related. They usually investigate the first or second layer of transaction. So after investigation, if you are found in control of the proceeds of crime, they'll either make you accused. And if you are not found in control of the proceeds of crime, then they will make you witness. Usually you will be either accused or witness.
So what I was presuming is when the against the ECIR, which through which
ECIR.
this the investigation was initiated, after the charge sheet is filed against that party,
Mhm.
then the matter then the
Yes,
my
the
client is
charge
safe.
sheet. Yes, we call charge sheet in case of a police, but all these agencies file complaints, prosecution complaints with the court. When the complaint is filed, means investigation is over.
That means then the
Once
client
the
is safe.
complaint, so that's what I said. You may check with the court if the client's name is in the witness list and prosecution complaint. He may not be even on the witness list, but if that prosecution complaint or charge sheet is filed with the ED court, in that case the investigation is over. So that is filed only when the investigation is over.
And how much time normally it takes to?
That's $1 million question. Very difficult to say.
Only one question, sir. High Court, this is yesterday's news only. High Court upholds the prosecution since ITR furnished only after survey and reassessment notice. Maybe you have to see the facts.
Correct,
Maybe
maybe
it's
facts,
some-
but as I said, no, again, all these income tax cases, the rate of conviction is going to be extremely high because of 278 capitally, presumption of culpable mental state. What genuine reason would the client give for not filing the tax return? There would be very less and limited cases where there is genuine some health reason or some mishap has happened. But otherwise, the defense would be extremely difficult. That's the reason why I said encourage clients for going for the compounding fee, though the amount is higher, but ultimately it's about the liberty.
Some cases, what happens, is taxes are paid, but the return could not be filed. Maybe time barring period has
Correct.
gone.
Correct.
In such cases. then
Correct,
you
but
have
in
to-
such
yeah.
cases, I think in such cases, department does not launch the prosecution in first place. when there is no loss to revenue, tax were issued just for not filing the tax return when the taxes are paid, may not be the case for prosecution. That should be argued out well. Yes. Thank you so much.
I think this was one of the eye-opening session, beginning with, we can make an application for a non-bailable offense to, compounding, to signing the projections and liability of director. I think various important issues Sagar did touch upon and enlightened us in last 1.5 hours. We are really thankful to him for sparing his valuable time. He has been managing his Pune, Mumbai office and keep shuffling, and extremely busy with the current ongoing matters of ED which he is attending. But Sagarji, we are really thankful for agreeing for this invitation of WIRC and coming over here and sparing your valuable time and guiding all of us. So we, on behalf of all the participants, WIRC, propose a very well-deserved vote of thanks and carry it with the loud round of applause. Let me clarify one thing which Sagar did touch upon was, projections. If you see the institute's publication, a lot of time we don't look at those publications and we just sign the projection as he rightly mentioned. But if you see those technical publication, it clearly says that we need to write the assumptions. We need to say that these projections may not be the actual figures in future. So kind of disclaimers we are supposed to give. If we give, I think we cannot be caught by any of the authorities, or even banks cannot sue us. So we'll have to go back to the basics. And, when we sign or when we give opinions, we have to think over about the other acts, which at time we ignore. We are talking about, advising the client on income tax, and we forget about Benami, or we forget about, prevention of money laundering. And the client will, as I said in the opening remark, will bring into the picture of this opinion, or they will say that this was advised by a chartered accountant. So we'll have to be very careful with the kind of disclaimers, kind of, assumptions which we have to give, or the facts which we have to mention in our certificate, in our advising over the email, or over the opinions which we are giving to the client. We need to be very extra careful. The time is so bad that the authorities are heavily coming upon chartered accountant. And also the last not but least, if we haven't taken professional indemnity insurance, we must take, if we are into giving of opinion or giving of, advisory to the clients. We think that the attestation is the only function, but I think advisory is more risky than the even attestation. So please look at all those aspects. See you all guys next Saturday. Wish you a happy learning, happy weekend. Thank you so much.